Airbnb is one of the best companies on the market. It's one of my favorite stocks right now. And one of the things that I think is underappreciated about Airbnb is its cash. The company has nearly $20 billion worth of cash on the balance sheet. Now, some of that is its own cash. Some of it is the result of what's called a negative cash conversion cycle, meaning that customers pay for their stays up front. And even if the stay is going to be 6 months away, Airbnb is going to hold on to that cash until the stay actually happens. And that's when that cash goes to the owner of the property. Airbnb gets to hold nearly $10 billion worth of cash and collect interest on it, generating 4-5% interest between the booking and the actual stay. That means the company has a ton of cash on the balance sheet. And I think maybe a good idea now is buy back its stock. The stock is now cheap enough and the balance sheet is good enough that I think that would be a phenomenal use of capital. So I wanted to put it into perspective today, just how much stock Airbnb could buy back, how much cash flow it has, and why this may be the best opportunity. This is a capital light company now, very efficiently run, generating a lot of cash flow. So there's really nowhere to invest this money except buy back stock or somehow return it to shareholders with a dividend. So the options would be buy back stock or pay a dividend. And I think at the current price, a buyback would be a phenomenal idea. That's what I'm going to dig into today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's get into some of the numbers. This is from the first quarter. Airbnb actually reports earnings later this week. And I will be back to cover that if you're interested in knowing my take. But you can see that about $2.14 billion worth of revenue, up 18% from a year ago. So this is a company that's growing. The most important thing is right down here, free cash flow. Now there's a lot of moving parts in their free cash flow, but they break this out and say over the past 12 months, there's $4.2 billion in cash flow coming into the business. So you could spend all of your cash that's sitting on the balance sheet that's available to you and then have somewhere around $4 billion worth of cash coming in over the next year to operate the business. That is the scale of the opportunity for Airbnb. So just how much cash does Airbnb have on the balance sheet? There's a couple of ways that you need to look at this. Cash and cash equivalents, $7.829 billion. Short-term investments, that's another cash. That's things like treasuries, $3.264 billion. That is $11.1 billion worth of Airbnb's own cash on the balance sheet. The next line is the other important one. This is the cash held on behalf of customers. When you add this to Airbnb's own cash, that's where you get to $19.8 billion worth of cash on the balance sheet. Now, the nice thing when you have that much cash is you can generate a lot of interest income. Interest income over $200 million. So if they keep stockpiling cash, this could be $1 billion business. Just interest income could be $1 billion business for Airbnb in the future. But I think a better use of this $11 billion of cash would be buying back stock. So what exactly would that look like? As I'm recording today, Airbnb's market cap is $81.4 billion. If we subtract the $11 billion in cash on the balance sheet from $81.4 billion, you get an enterprise value of $70.4 billion. That means the free cash flow yield, even after you pull out the interest that's being made from the cash that's on the balance sheet, the free cash flow yield is right around 5%. So that's about what you can get from a treasury. But Airbnb is a growth company, growing revenue at 18%. So that's why I think it would be a good idea at the current multiples to buy back stock. If the stock falls even further, this could be an even more attractive multiple. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Now, the reason buybacks would be attractive for a company like Airbnb is I think this is still going to be a growth company in the future. So if their revenue goes up, if their free cash flow goes up, you're going to want to be buying back stock when the valuation is lower, like it would be today. So think about this like Apple when they were starting to buy back stock in the early to mid 2010s. That was a great time to be buying back stock. Now, when growth has slowed and the multiple is over 30, maybe not such a great time to be buying back stock for Apple. So an opportunistic time for Airbnb. The other thing is the way to think about the investments that they need to make in the future. They're generating $4 billion worth of cash today. Their product development expenses are running at about a $2 billion annualized run rate. So they could increase that to $3 billion and still have plenty of cash left over. So if they have investments that they want to make in new products, CEO Brian Chesky has talked about artificial intelligence providing a lot of new opportunities for the company to be the concierge of the future. But again, they're not going to be going out and building AI data centers. They're going to be licensing that from other companies. They're not going to be building their own models. They're going to be licensing those from other companies. So Airbnb is going to have ongoing costs from some of these additions that they may make. If they add services, if they add flights to the platform, if they add some sort of concierge, that would maybe increase their ongoing costs, but that's going to be in line with revenue growth as well. It's not going to require a bunch of capital expenditures up front where they would need to hold a whole bunch of cash on their balance sheet. So that's why I think Airbnb is getting to the point where they need to start thinking about what they're going to do with this massive cash hoard. Yes, they definitely can't dip into the cash that's held on behalf of customers. That would not be a wise move. But I do think it would be prudent to use some or even all of that $11 billion and just have a huge buyback program that could potentially have two outcomes. Either you announce it and the stock goes up, or you announce it and the stock doesn't go anywhere. Maybe the stock even falls over coming quarters, and then you can be opportunistic in buying back that stock. So this just gives the company more flexibility to add value to shareholders. That cash that's sitting on the balance sheet just isn't doing anything, just sitting there unless they're going to invest it in something in the future. So they may as well invest it in buying back their own shares. And it certainly doesn't look like Wall Street thinks that there's going to be any slowdown in this business. So again, this is an opportunistic time to be buying back stock. The estimate is that 2024 revenue will be $11.2 billion. That will increase to $12.5 billion in 2025 and $13.9 billion the following year. Free cash flow. Here's what those estimates look like. Expecting that free cash flow to increase to $5.9 billion. That's the average estimate for 2026. So again, between now and then, there's going to be another $10 billion plus that's going to be added to Airbnb's coffers. So this is a theme that I think is available in the market right now. Companies that are generating a lot of cash, but maybe don't have a lot of hype behind them, are not getting very high valuations. So opportunistically, I think the best companies are going to buy back their own stock and boost their earnings per share going forward. If they have confidence in the business, I think that's absolutely the right thing to do. But we'll see if that's even mentioned on the conference call, but don't be surprised if analysts at least ask about it when Airbnb has their conference call after second quarter earnings are released. But let me know what you think about Airbnb potentially doing a buyback. Leave those thoughts in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.